Welcome to Follow the Money, accounting for operating activities with an emergency plumber. It's 2 in the morning. A pipe bursts inside a downtown restaurant, and water is everywhere. The owner panics and calls the one person who can save the night, an emergency plumber. Now, you might be thinking, what does a flooded restaurant have to do with accounting? Everything. Because every single thing that happens over the next few days, the repair, the invoice, the payment, the supplies used, all of it gets recorded. Today, we're going to follow that plumber, transaction by transaction, and learn exactly how operating activities get captured in the accounting system. Let's meet our plumber. Her name is Rosa, and she runs a small emergency plumbing company called Fast Flow Repairs. Rosa gets the call, loads her van, and heads out. By 4 in the morning, the leak is fixed. The restaurant owner is so relieved that he pays Rosa right then and there, $350 in cash. So what just happened economically? Rosa performed a service, and she received cash immediately. 2 accounts change here. Cash goes up by $350, and service revenue goes up by $350. Now, remember the rule. Revenues increase with a credit. Assets like cash increase with a debit. So Rosa's first journal entry is debit cash $350, credit service revenue $350. Debits equal credits, the entry balances. Revenue is recorded the moment the service is performed, not before, not after. Later that same morning, Rosa gets another call. This time it's a property management company with a broken water heater in one of their office buildings. Rosa fixes it, and the bill comes to $600. But here's the difference. The company says, send us an invoice, we'll pay you within 30 days. Rosa does the work, so she's earned that revenue right now. But the cash hasn't arrived yet. So instead of debiting cash, we debit accounts receivable, $600. That's the amount the customer owes Rosa. And we still credit service revenue $600 because the economic event, completing the service, already happened. Revenue follows the work, not the payment. The entry balances, and Rosa now has a receivable sitting on her books. 2 weeks pass. The property management company sends Rosa a check for $600. Great news. But wait, is this new revenue? No, absolutely not. Rosa already recorded that revenue when she finished the job. This payment is simply the customer making good on what they owed. So now we need to show that accounts receivable is going away and cash is coming in. The entry, debit cash $600, credit accounts receivable $600. One asset goes up, another goes down. Revenue is untouched. This is one of the most important ideas in accrual accounting. Collecting cash and earning revenue are 2 separate events. Don't confuse them. Now let's talk about expenses, because Rosa's business doesn't run for free. She has a technician, Marco, who works full-time. This week, Rosa owes Marco $420 in wages, and she pays him immediately by check. Economically, an expense was incurred and paid at the same time. Wages expense goes up, and expenses increase with debits. Cash goes down, assets decrease with credits. Entry, debit wages expense $420, credit cash $420. Balanced. Done. But what if Rosa gets her monthly utility bill, $110, and she won't pay it until next week? The expense still happened now, so she records it today. Debit utilities expense $110, credit accounts payable $110. That payable is a liability, money she owes. When she pays it later, she'll debit accounts payable and credit cash. Same expense, just 2 separate moments in time. Here's one more concept that trips a lot of people up: supplies. Rosa stops at the supply warehouse and spends $280 on pipe fittings, sealant, and copper tubing. Does she expense all of that immediately? Not necessarily. Those supplies are an asset until she actually uses them. So the entry when she buys them, debit supplies $280, credit cash $280. Now, by the end of the week, Rosa has used $200 worth of those supplies on various jobs. That's when the expense happens. Debit supplies expense $200, credit supplies $200. The remaining $80 is still an asset, sitting in her van waiting to be used. Purchasing supplies and consuming supplies are 2 different economic events, and accounting treats them that way. So now we've got a handful of transactions recorded: a cash sale, a credit sale, a collection, wages, utilities, and supplies purchased and used. Each one followed the same process. Identify the economic event, figure out which accounts changed, apply debit and credit logic, and confirm the entry balances. If Rosa were to list out all her account balances right now, before any end-of-period adjustments, that list would be called an unadjusted trial balance. The total of all debits should equal the total of all credits. That mathematical balance tells us the books are in equilibrium. But here's the honest truth. It does not guarantee every transaction was recorded correctly. It just means the numbers add up. Accuracy still depends on applying the right accounts and the right logic every single time. Let's close with a question to test your thinking. Ready? If Rosa completes an emergency repair today, but the customer won't pay until next week, when does Rosa record the revenue? And which account replaces cash in that journal entry? Think about it. The answer, revenue, is recorded today, the moment the service is performed. And instead of cash, Rosa debits accounts receivable. That's the core idea of this entire lesson. Accounting follows the economic event first. Then it records the right debit and the right credit based on what actually happened, whether cash moved, a receivable was created, supplies were consumed, or a liability was born. That's how Rosa's story gets told, one journal entry at a time.